This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. I want to talk about risk today in multiple time frames and understanding what time frame is the proper time frame to be trading on. Sometimes when a market is making a really strong move, there's a question as to whether should I wait for a pullback and trade on this time frame that's showing a big breakout, or do I go down to a lower time frame? So I want to give you some insight into that. But if you notice my market call over the last few weeks, I've basically been saying that the risk parameters have increased for buying off the weekly or the monthly, doing longer term setups. Whereas if you want to trade off a shorter term time frame like the daily, hourly, or even smaller than that, you can continue to find ideas. And so I want to give you a little bit more insight into that and better understanding as to when you should know I cannot trade off this time frame and when you can trade on a specific time frame. So let's go in. The example I'm going to use today is this MGNI, Magnite Inc. And I think it gives a really good example of a stock that started out, if we look at the monthly chart, it had the really violent sell-off early in the year like everything else, but then it formed this sort of a base. And if you notice, the 18 and the 40 on the monthly chart started rising here, I would say back in September, October, we started to see actually both lines rising. And so just knowing that you have sort of this price support in place, and then if we go to a weekly chart, I want to zoom in on this a little bit. So here's the decline, and then we go through this sort of sideways period. And if you notice what took place on the weekly, you had a low ADX condition in place. And for a decent amount of time, we had the ADX below 25 and even the DI lines below 25. That was for a few months. And then we started to see some strength from the buyers here. And so, that is, obviously a good sign. But when as I've talked about in prior videos, when you have this low ADX condition in place, you want to draw a trend line in place. I'm just going to put a horizontal line in. You could have possibly been a little bit more aggressive, maybe drawing a slight downtrend line, but I'm just going to use this horizontal line, and I want to do that for a reason. So we have a low ADX condition in place. We have the sideways line. We break the sideways line. That is one entry. But there are a lot of times, especially in small stocks that are trading in the single digit category, that people just don't see, especially on the first move. And so you want to be able to enter this trade even if you miss the breakout week. So how would you go about doing that? And when is it still appropriate to trade this breakout pattern? And when is it okay to continue to look at this as a weekly breakout setup? And so let's just look at this and go back to the 4 time frames. So if we look at this horizontal line, I'm showing where we went sideways and then we broke out. ADX starts to kick in, DI starts to kick in. And if you notice what took place on the daily chart at that level, we had a pretty nice move to the upside, and then we got another opportunity to buy on a pullback. And so one of the things I just want to make sure I make clear here is that there's 2 trades. I am over and over again in these videos, I'm talking about 2 trades. And if you can get really, really good at understanding these 2 trades, you're going to be very, very busy and you're going to be finding a lot of good opportunities. You don't have to have 20 different strategies that you're using. Learn one good breakout strategy and one good pullback strategy, and that is going to keep you busy, I would say 80 to 90% of the time. And so this specific stock showed the breakout pattern on the weekly, but then if you were looking for a pullback, you would have seen that it took place not that long, maybe a month or 2 after the actual breakout day. You had a little bit of a run and then it pulled back to the 18, and the 18 was above the 40 and both lines rising. So now on this time frame on a daily chart, you're setting up the 2 time frame pattern where the daily is pulling back to the 18, and then you'd go to the hourly chart, and I'll go back and show you. So that's where this was here. And when you crossed above the 18, that was basically your trigger to get yourself in. Now, the reason why I wanted to bring this up is I would view this pattern, this entry pattern using the daily and the hourly, as a entry for the weekly breakout. It's your second opportunity to get in this weekly breakout. And if I bought this pattern off of an hourly break here, using the daily and the hourly, I would still manage it off the weekly because it's still close enough to the breakout area that I can use the weekly chart, because I really want to make bigger money in this. If it's a weekly trade, I want to do it off the weekly. I want to manage it off the weekly. It's going to give me a lot more opportunity to participate from a bigger picture standpoint. So that's sort of step one. Step two is, once this thing makes a move like this, and now it pulls back, and let's just say that this stock you did not see, and all of a sudden it shows up on this pullback to the 18 right here. At this point, you can only trade it off of a daily and an hourly. Let me update that. So at this pullback here, you cannot trade off the weekly anymore. This is not a weekly trade. There's too much risk. You've run too far away from the 18-week moving average. You cannot use this as a trade on the weekly. And this is what I'm talking about in the market right now. When I say there's too much risk on the longer term time frames, there's too many stocks that have made runs that are too far away from their 18s to look at this as a trade, as a weekly trade. You have to go up a time frame and say, all right, if I want to play this, I have to play this with the daily being the higher time frame and the lower time frame being the hourly. And then at that point, if it breaks this low, so if I were to do this trade and put this trade on, I might have done it here on this initial thrust coming up through the 40, and my stop would have gone, underneath that bottom, which held here. It did not take that out. Or if I waited for it to come all the way to the 18 on the daily chart, which was the second pullback, it finally touched the 18. Then at that point, when it came up through this low here, I would have bought, and the stop would go underneath this bottom. So those are two different options. I have no problem taking this initial trade, because if you don't take this trade, you could miss the move. And if you notice on this first pullback back here, it only gave you one opportunity and then it took off. You never got the second chance coming back and testing. And the funny thing is that this first pullback came back to the 18. So when you pull back to the 18 MA, I think you should take across of the 40. If you notice in this example on the second one, it hadn't touched the 18 yet, and that's why you probably need to double dip and come down for a second opportunity. But when the momentum is good and the overall trend is good, I have no problem taking this first signal coming up through the 40 here and using my stop and then giving it a chance to work out to the upside. My main point I wanted to make, though, on this video is that when you get too far away from your weekly moving average, you have to go to the next time frame in order to trade this stock. And if I took this trade, I'm not looking at the weekly. The weekly isn't really relevant to this trade anymore because it's too far away on a weekly chart. I'm only looking at it from a trade on a daily basis with the hourly as the trigger. So I hope this makes sense. The goal here is to understand your risk parameters, because if I bought this stock here and I'm looking at it as a weekly trade, it's too much risk. There's a massive amount of pullback risk looking at it on a weekly. So understand your time frames and the risk parameters, and use the stops based on whatever time frame you're trading off of. And you have to understand sometimes that you have to wait for, if you want to do this for a bigger picture trade, you want to own this, you love this company and you think it's going up to 500 or 300 over the next couple years, wait for the next opportunity on the weekly chart so that you can give it more room and you can trade and put an investment on that's probably going to be something that's going to last a little bit longer than something you would do off of daily. So hope this makes sense. Please hit that subscribe button if you want to see more in trading tactics and in-depth analysis on MACD and ADX. And give me a like as well, and we'll talk to you soon.